Alrighty, what's going on, ladies and gentlemen? Welcome back to the channel for another market update. Hope everybody's having a lovely day. And with that being said, let's get into the TA. It's actually like, fresh out in the morning. It's not it's 10:05 a.m. Eastern Standard Time. I'm putting out this video because I do think we're at one of those pivotal spots, and I'm going to point out what I'm watching. So we're going to make this video pretty quick here. I'm going to make this a very simple one. And before we get into things, if you are enjoying the free content, all right, the value that's provided to you guys for absolutely no cost to you, please support the channel with a like. I would appreciate it so much, and you definitely would be putting a smile on my face. All right, let's get into it, guys. So the first thing I'm going to go over here is the fact that we did have QQQ reaching overbought territory over here on the 4-hour RSI. That was the specific condition that I was waiting for to enter my puts. All right, so your boy did enter the full put position. I'm pretty hyped about that full put position. I'm hyped to pull in likely a few grand over the following weeks, and that's going to be on top of the intraday stuff. All right, so the first spot I'm going to be watching for, guys, is really down here at 324. Why am I watching at 324? It's because it's where you bounce over here. But this is also the previous peak. This is like the zone you formed here. Let me take this clutter off the chart first, because there's, we have several factors of confluence here on these charts that we're going to go over in today's video. So, and that's why I'm putting it out early, because I think it's likely that we sell today. I mentioned in last night's Webull update that we did have, we got to set up to sell. We can go higher, but I think we're probably going to get a pullback, and that's what I'm going to talk about right here. Right, so what I just deleted off the chart was this fib. Right, so this wedge started all the way down here at 320. So if you bring it all the way up here, the 0.5 retracement, the 50% retracement, is down here right around 324. So that is the one factor of confluence right there. And then we also, if you do come down to the golden pocket, you're going to be yeah, I mean, this makes sense. It makes sense. This was also the previous peak before this previous peak zone was established, which maybe we should start labeling these zones. We're not going to start today, though. There we go. But yeah, guys, we have this big falling wedge, or this big rising wedge here inside of this, I don't know, whatever you want to call this thing, a narrowing channel or a rising wedge. It's not much of a rising wedge, just because you do see, they're not parallel lines, but they're not they're not narrowing too much there. But you do have SPY over here also in a rising wedge. I don't know which way we're going to break from here. Or, well, I'm guessing you're going to be breaking down from this. But I don't know if you are going to bounce here, bounce up, go test the blue box next week, and then break down. That would make sense to me. And we're going to go over, it's going to be a longer video over on the weekly update. It's going to be a more detailed video. We're going to talk about what I'm looking for next week. But today I will briefly go over a possible scenario for next week that would align with what they did over here. So we have, I've been talking about this over the past few days. Let's just take off this clutter here. All right, the fibs right there. Now that we went over that. Over here, guys, they started dropping you literally 2 days into the OPEX. This was the Feb 17 monthly OPEX. They dropped you on Feb 16. That's when they started doing so. And yeah, I mean, guys, you started out the week right here with this big bust up. So I'm just going to say, if we do tank into the close today, absolutely tank, over here, if we get down there, then, maybe we start the week off with a rally on up, or we start the week off with, they bring you down another day and then they rally on up. So that's what I'm getting at. What if they just end up rallying you on into, say Thursday or Friday, and then they start tanking you? I'm just saying, all right, that's what they did over here. All right, it's in the dealer's best interest to do so. And like I said, the dealers want to keep you above 410 and close you under 411. So, if they're going to close out the week with a drop like that, they can't drop you all week long. They have to send you up with a bounce so you can come down. So maybe we start literally just falling down here. Maybe we just literally stay range bound in between here and right here, this blue box right here. Maybe it's that, or it's going to be the full range. I don't think you're probably not going to end up coming all the way down here. But that is where this wedge started. So that is something to note. It literally did start down there at just about 404. That was the gap fill. We had a previous gap fill around 404 that initiated that bounce. And that's why all these lines are on the charts, guys. If you don't understand all this, just know there is a free course coming out that will explain everything. So you can, you know, if you would like, you can go through that course when it comes out, and you will know what you're actually looking at here when I go over stuff in my videos and then over in the Webull updates. If you guys haven't already started following along with the Webull updates, I'm just going to say, if you enjoy these, you will definitely enjoy the Webull updates. It's pretty much everything I go over here on a daily basis, except just all in one consolidated format over there each and every night towards market close. But, you know, anywhere from, we'll say 4 to 9 p.m. Eastern Standard Time is when I put those out. And then these are the intraday updates. So there's that. And of course, you guys can come over and join the Discord if you would like to join the Discord, and I will just, you know, I'll keep you updated, and then I'll also let you know about anything that pops up, any setups that arise that I play, you know, shorter dated contracts on, and then yeah, my swing trades. So there's that. All right, guys. Like I said, I'm gonna keep this video short. That is going to be one right there. Let's just clean that up right there. I don't think we have anything super important next week, but let's just do our due diligence here and check anyway. Just to see if we can work that into the analysis here. I mean, you got retail sales, but we always got retail sales coming out. Yeah, no, guys, never mind. We have like nothing next week. So that's what I'm saying, guys. We don't have a catalyst. I've been telling you guys, hey, all right, if the dealers are going to tank you before the May 19 OPEX, then you're going to need a catalyst to do so. If not, the dealers, it's not in their best interest to really take SPY that low. That's all I'm getting at. And they can take you down low, but now that you're so close to it, I personally, if I was a dealer, I wouldn't be taking it down here again. Intra week next week. I just wouldn't be doing it. I would wait until, yeah, well, actually, or I would do it to start off the week, get everyone piled in puts, and then I would bring you back up. That's also a scenario, but you run the risk of, you know, like, hey, but then again, I mean, no, it really is like, it's the black swan potential. You just need that. Without that potential, you don't. Like, why would you get that gamma squeeze to the downside? It's just, why would the dealer not do? And it's not like, guys, it's not like there's just one dealer. No. Imagine there's a few dealers for each ticker, and it's probably how it is. Probably the same dealer for multiple tickers across the market. It's probably also how it works. But, yeah. All right. So, we will finish things off with, well, we'll go over ES here, and then we're going to go over Mr. VIX. So, last night's Webull update, I kept it really short, sweet, and simple to the point. And I pointed out that ES is literally just in this range from 4167 to 4118 down here. It's very simple right here. All right. Here's your trading plan, your extremely simple trading plan. You see an hourly close above this blue line up here. You're going up here to 400 to the 4020, 4200. That's what I meant to say. All right, you see an hourly close underneath this blue line right here, 4118. You have your next target is 406225. That is your like next support. That's why I say next target. All right, so it's really as easy as that. We were at the top of the range. So, you know, with how SPY and QQ were looking, it was looking like we were going to get the breakdown from these, and that would, you know, bring ES to the bottom of the range. I didn't know if you were going to get this, you know, rejection up there. Maybe you formed a divergence on it. You didn't. But, yeah, we're going to have to see what happens at the bottom of the range. I do think it looks like it's about 0.5% from where we are right now. Yeah, so just about 0.5% down there. Pretty decent move down on SPY. That'll take you to about 410, and we're gonna have to see what happens. That's why I say, like, are they just gonna keep you range bound? If I was a dealer, I really would. I would either, I mean, I would keep a range regardless. I wouldn't have. You're not gonna have a trending week next week if it's the last last week of OPEX, unless it's going to be a move to the upside. Unless they start the move down, maybe Monday it's also a down day, and then they take you up the whole week, and that's how they ended out. I don't know. I have absolutely no idea. No crystal ball. Just don't have that. Now, something before we go over VIX, I'll bring up right here. This is why this morning I took my full put position. This was absolutely gorgeous. It's beautiful. And this is something I've been waiting for since we hit this down here. All right. This 100.82 mark. All right. So effectively, let's just look at this chart. Okay, let's just, not effectively, objectively, let's look at this chart. All right, what do you have? You have a double bottom in play. All right, so you get a breakout above 105,883. That is where, you know, that is your neckline, and there you go. You're gonna have a target on the board there. But you know what? For the sake of it, let's put that target on the board right now. Why not? Literally, why not? It's a Friday video. All right, we're only at 10 minutes right now. Maybe we'll make a, you know, 12-13 minute video. Let's get after it. All right, where is the D's though? Oh, they're over here. Okay, so double bottom. That is just literally a normal double bottom. It is not a ugly double bottom. It would be, I think, an atom and atom, if I'm thinking correctly, because it's a sharp move upward like that. And look, we are thinking correctly. Let's just look at the even eve. Come on, buddy. Was I right? Yes, I was. Look at this, guys. Look, yeah, your boy, you know, your boy has came a long way. That's all I'm saying. See, this is what someone asked, like, where they can start the other day, and I suggested, hang on, me so what I got right here, so I don't have one of them right here, but these are the Bukowski books I have. I have the so I have with me right here, I have Getting Started in Chart Patterns. That's honestly, I would read that one after I read this other one, which is Trading Basics. And that's the one, I don't know where my copy of that went. I think one of my friends has it. I never got that back, but yeah, I would go through Trading Basics just to literally get, you know, the introductions to everything, just charts in general. I don't, you know, it's going to go over trading and stuff like that as well. I wouldn't take all that stuff to heart. If you want, you can, but like all in all, the value in that book is going to be, hey, you're learning about charts, and then you would go over to Getting Started in Chart Patterns right here. If you really want to, I wouldn't dip my toes into Elliott Wave. I'm going to be honest. Elliott Wave, in my opinion, I got like halfway through this Elliott Wave principle book right here. Maybe a little, we'll say 30 to 40% through. And then I got obsessed with trying to become a consistently profitable trader. And I realized my analysis, I don't need to improve my analysis right now. My analysis is it's good. All right. So over the following months, like, no, I'm going to be, you know, like I'm not going to say I'm not going to pick up this book, but yeah, I don't think it's going to benefit me greatly. But, you know, learning about Elliott Wave over, you know, consistently trading profitably, or at least I want to put my efforts into that. That's what I'm getting at. But that's where I would start. I would start with those Thomas Bukowski's books, and that's this guy's website. That's literally who made this website. And you could just pair up everything you see over there in those books with what you got right here. And you could just continuously search stuff up. And if you see things on the chart, that's when you can, you know, do things like this. All right. So that would be your neckline. All right. We have our double bottom there to there. Let's just measure rule. Let's read this. Reference the figure to the right. Compute the height from the highest peak A to the lowest valley B in the pattern. Then multiply it by the above percentage meaning price target. Add the result to the breakout price point A, the highest peak in the pattern. All right. So where is the above percentage meaning price target? 73, and that's typical for all of these price targets. They're typically all like this. All right. And we're not going to put a target on the board until it is over there, but let's come over to the handy dandy calculator. All right, what was that, $5? Is that what I saw? I think I saw $5. Yeah, $5. $5. And what was it, 0.73? Is that also what I saw? 0.73. All right, so we got $3.60 move from here, so that's gonna put a 109 price target on the board. Kind of crazy. 109.50, we'll call it right there. Make it not an even number, but, well, 9 is an odd number, but, you know, a clean, you know, 50-cent intervals here. Yep. All right. But yeah, guys, I'm going to be looking for this breakout here. If we get that daily close over it, we did not yesterday. We started, but, you know, you see that little wick rejection. But today, we're off to the races. So, you know, with the dollar breaking out, I'm just saying that's not going to be the best for equities. And you also have VIX down here. And VIX, guys, VIX has been, listen, I actually realized today, why have I been looking for any, like, sort of volatility on these markets. Like, no wonder we've been having these lackluster days. Like, you had a catalyst day the other day. You had this over here that produced, like, you had $4 or something of range. Let's just take a look. Or maybe it was $5 of range. $4 of range. All right, that's not a lot. It's really not a lot. And it's Friday. Or no, we had more than $4 of range. No, it really was. All right, we didn't have a lot of range the other day. That's like so little. Over here on SPY, now you had $5 and yeah, so over $5 of range. So that matched my criteria of what I was looking for on the CPI day. But yeah, guys, we haven't had a lot of volatility because VIX has just been suppressed. It's just been down here, and that's what I was saying. Unless you're gonna break out from the range, you're gonna get sucked back down into the range. I didn't know you were gonna get sucked all the way back down here. But yeah, look at what's going on. You still do have this gap. So I am like, you know, I'm going to be skeptical of any upside here on VIX and downside over here on indices until this gap gets filled, which could mean that, you know, SPY and QQ are going to go back up. And that's why I say this could just be a retracement, guys. We could literally just be getting a retrace. If I was a dealer, I really would try and do my best to just trade us flat going into next week and all of next week. That's what I would personally do. Or, you know, you have a decent move down, followed by the decent move up, and then they start tanking into the end of the week. I don't know. But yeah, this very much so can just be this. We could just literally do the retracement of this move here, which wouldn't bring us, you know, it wouldn't bring us all the way. It wouldn't be this crazy move all the way back down to 320. It can be, but now you're back into this lower range. I don't think that would be the case. I think you're probably going to get buyers stepping up where I have these white zones here, which is right around here, 323-ish, and then 324-ish, like I was, you know, saying I was looking for. But yeah, let's look at the 15-minute time frame, though. You know, you could be getting your bounce. This is something to be, you know, keep a track of everything. That's why I watch the 15-minute time frame. I also watch the 3 minutes, so that's the thing. You could be getting your back test here, and then you could, you know, go down lower. Or you literally could come all the way up here, form a new divergent high over here on the hourly time frame. And yeah, then you come down. I don't know. I have no idea. Let's actually, the little thing, let's just do that right there. All right, let's see what happened the last time. So that was, yeah, when you hit there, that was your bottom. All right, over here, when you hit that, let's see, where'd you hit it? You hit it right here. And no, you had like a lot more downside. You had just about 1%, not a lot, but you had like $3 more of downside over on the Qs. All right, over here, see what happened. So it was literally right there, and from the bottom of that candle, you had 0.6% to go. All right, over here, it was your bottom before that little bounce. No, it wasn't. Never mind. You went, yeah, you went a little further down. All right, so I'm just saying, all right, you could be bouncing. I wouldn't be. I'm just saying I wouldn't be getting super bullish up here. I would be waiting for a pullback. If you are going to attempt to play the upside, as well as like, hey, just know that SPY and QQ both have these consolidation patterns that typically break down, you know, and on top of that, ES was it's in the top half of the range here. So, you know, I'm just saying the risk to reward is saying you should be playing downside and looking for downside setups up here. But, you know, we're also in that squeeze territory, and, you know, all of this could fly out the window if the dealers really wanted to. I'm serious, because Max Payne scenario is still going to be taking you up there. I'm still going to be watching the top of this, you know, narrowing range up here, or narrowing channel we got up here, / rising wedge, whatever you want to call it. I don't know. I was referring to it as a rising wedge, but then I really looked at it, and look, it doesn't, like, listen, if it was like that, then yeah, all right, but it's not. It's like that. So yeah, just narrowing channel, we're going to refer to it as. And if you did start moving up towards the top of that narrowing channel, it would be around 329-ish now. So, you know, that is something to note that is on the table. And, yeah, with that being said, guys, I will catch you guys in the next one. Peace.